you're doing something in crypto, at some point you'll get to some scale where people will be like, crypto kar raha hai, therefore fraud. I'm sure at the back of your head you're like, I'm running an exchange, so people can potentially lose money. It's like probably one of the worst cycles in the world.
Us at Mudrex, we've now been around for 6 years. We've seen that one cycle, and with crypto, it seems like everything is just super compressed. All asset classes go through cycles of hype and suppression, and that happens with crypto over just 4 years in multiple ways.
A lot of very high profile scams / frauds in the industry. These people are making money. Why the extra? Why push a little more and try to make some more money and then get in trouble?
That's just the nature of us as humans, right? Like that cycle of greed always comes in. Crypto is not an outlier to this. We've had regulated assets see this actually much more than crypto does.
Do you think regulatory clarity will also come to India?
When the RBI banned crypto 3.5 years ago, where there was expected that anyone dealing in crypto would get a 10-year prison sentence. So we've gone from a 10-year prison sentence to come register, comply.
So what's the failure case for you?
I think the simplest failure case is that everything shuts down.
Ladies and gentlemen, I'm with Adel. He is a fantastic founder and somebody who's actually working in crypto. So he runs a company called Mudrex. They've raised $21 million. They're valued at nearly $100 million. And I think over the last 8-10 months, crypto has sort of been quiet. There's no more wag me on Twitter anymore. And I think only the serious people who are in that industry are left. But also lots of shifts are happening. If you've been noticing over the last few weeks, Kraken has disappeared, Binance has disappeared from India. And there's so much flux that I just thought I'll get Adel here and I'll ask him what the hell is going on. So ladies and gentlemen, welcome to another episode of The Numbers Game. And today, we're here with Adel.
Hey Varun, thanks for having me here.
Hi. Okay, so first question, this is going to be a hard one. Huh?
Yeah.
How do you sleep at night?
Poorly.
Let me give the audience some context. You're running a crypto company. It's like probably one of the worst cycles in the world, right? Like people have they got very hyped about crypto, then they all lost faith. I'm sure at the back of your head, you're like, I'm running an exchange, so people can potentially lose money. So, you're probably losing sleep over that. Then there's the question of, oh my God, other crypto exchanges are being shut down, right? And maybe there's some nuance to that. We'll find out. But, that's worrisome. And finally, it's like you're doing something in crypto. At some point, you'll get to some scale where people will be like, crypto kar raha hai, therefore fraud. You got to deal with all of that. Why? Why would you take all that?
No, so I think we'll talk a bit about why crypto is valuable later on in the podcast. But to be really honest, with us at Mudrex, we've now been around for 6 years. We've seen that at Mudrex, we've seen that one cycle. And with crypto, it seems like everything is just super compressed, right? Like all asset classes go through cycles of hype and suppression, and that happens with crypto over just 4 years in multiple ways, right? So Mudrex has been around for 6 odd years. This is our second cycle that we are seeing as a company. Personally, this is, I think, the third cycle that I'm seeing and going through. So most market dynamics are actually easy to digest. Those are par for the course, and those are not the things that I worry about anymore. The parts that I worry about more are the things that are uncertain and moving really fast. And you lose sleep basically over just those things. And then how they will change. So for example, something like a Binance ban happening, right? And that as a result causes a large influx of users coming in to the platform. And then that leads to growth in numbers. And now you need to just make sure that your platform is up and running and scaling up really well, right? Like those are the things that keep on changing day over day that make you just stay up at night.
So just like the government would come and ban everything, you're saying there are also good times where, something like a Binance goes out of business in India and then that user base comes to you.
Correct. I mean, some part is that. Of course, it impacts the entire industry as well. Then there are also just generally the battles that we are fighting are very different, right? It's an asset class that's growing, that's coming up. So the job of a founder like me in a crypto company in a country like India is actually sitting and first on the one end talking to regulators, making them understand what the industry is, how is it growing, and so on and so forth. Working with our users, explaining them how do you participate in this asset class, right? About not thinking of this like a asset where you can just gamble your money away, or look for those 100x returns and think of it as a way to diversify and grow your wealth over long term, right? Like so those are some of the different pathways that we've chosen, and that's the place where my time gets spent effectively. On a day-to-day basis.
What's happening with Binance and Kraken? I mean, I know they've disappeared from the App Store. The problem with the news cycles these days is just so fast that I didn't really understand why. I just knew they went out of down for a bit.
Yeah, so if I can maybe just start off with some backstory of what's been happening with crypto in India over the last 2 years, because without that, all of this just seems out of context, right? So a couple of years ago, actually 3 odd years ago, the first main thing that happened was that the Supreme Court reversed an RBI order that said that all crypto trading was banned. That led to a lot of users coming in. That got coupled with, the insane quantitative easing that happened during the COVID period and all markets going up, led to a lot of Indian users also participating in crypto. But not all those outcomes were good. And in a lot of cases, there was a lot of, I think in general, pressure over the regulators to figure out a way to regulate all of this. But step one for the regulator to do it is to first understand, okay, what's the real scale? So a year and a half ago, there was a new tax regime that came out that said that, okay, if you have crypto or are trading crypto, this needs to be followed, right? That was, I think, step one for the government and the regulator to try and understand what's going on. A year after that, in March 2023, there is this body called as the FIU, the Financial Intelligence Unit under the Ministry of Finance. They are basically the ones who are keeping an eye over all suspicious transactions in the country. So all banks report into them, all payment gateways report into them, all payment processors report into them and tell them that, okay, these transactions are suspicious, these are suspicious, these are suspicious. And that's important because a lot of times money in general gets used for terrorist financing, money laundering, for all illegal, illicit activities, and so on and so forth, right? So another large step in formalizing crypto is to also understand, okay, what amount of crypto is actually being used for this. So the FIU brought all entities or asked all entities that were dealing in crypto to start coming and registering. And by the way, this is not something new. Every single country in the world has an FIU equivalent body. So for example,
like a regulatory body.
Yeah, it's not a regulator. Regulator was a regulator.
And you guys are regulated, right?
So there's a difference. We are registered, not regulated, because the regulation means there is a regulator who is setting up rules. There are still no regulators about it, but
in India.
But there are ways in which you can register and declare these transactions. So that typically is always step one. So for example, Mudrex is also registered in the EU as a virtual asset service provider. So just like there is the FIU in India, there is a body in the EU that takes care of all these fraudulent transaction monitorings. And if we have to operate in the EU, we need to report these transactions. So the FIU just basically did the same. They asked for entities who are serving Indian customers to come and register with them. They gave a 9-odd month window for everyone to do it. So for example, Mudrex and 30 other entities went up and registered fairly quickly. We got our registration done in June, July, and since then have been operating like this. The FIU also sent out notices to all entities outside India, requesting them to come and register multiple times. Give them a 9-month window.
So all your Kraken, Binance, everyone.
Yeah, so it was like, if you are operating in crypto, come and register. It's like saying that if you are operating any XYZ thing, come and register with us, right? Fairly standard thing to do. What happened is that over the course of these 9 months, most of these entities did not register. So if they did not register, now FIU is saying that if you're not wanting to agree with what we are saying, then might as well don't do business in the country, right? And that's what has happened now. That after that 9-odd month window, they've gone back and sent show cause notices to everyone saying that, okay, you need to come and tell us what are you doing in this country. If you are not going to do it, we will block access to your platforms. And as a consequence of that, over the last 2-3 weeks, first the Apple App Store got banned, then URLs started getting blocked, and now the app is also blocked from the Play Store for most of these offshore entities. None of this is true actually for a lot of the entities who are compliant, and there are about 35-36 entities that are compliant, including Mudrex. So the FIU is not saying don't do business. It's just saying that if you're doing business, these are the rules you follow, and then just follow them and do it, which I think is a very a reasonable ask. Like everyone in the world does that.
What is the Kraken and Binance disappearing from India done for you? Like how many new users has it brought you?
Yeah, so again, to give you some sense of how large or what the base or what the market is, it's estimated that about 5 to 8 million users have accounts on these offshore entities and exchanges, and there is about $400 to $500 million worth of crypto on these exchanges that is held by these users.
This is Indian users have 500 million.
This is Indian users who have this much amount potentially on most of these exchanges. So for most of these exchanges, for example, let's say a Binance is huge, right? They've got $70-80 billion worth of assets. So a 300-400 million might not be that large for them, but it's large in the overall context. So as a result, what has started to happen is that after this, or because of this banning, more and more users have wanted to shift to Indian platforms or FIU compliant platforms. And I think that's rightly so, right? simply because from the perspective that, let's say, if I'm an investor, I would rather have my money in a platform that's governed by my government, so that if something goes wrong with my money, I can go back and at least ask my government to take some protective action against the entity, right? For example, we've seen everything that's happened with FTXs of the world and Vault and so on and so forth, right? Over the last couple of years. Now, all of that has washed through, but in the future also things like this might happen. And you are better off keeping your money in a platform that's effectively registered with your government, so that you can go to the local police station and like file a complaint at least, right? You can't do things like that with
because
Binance.
people have the ability to come and file a complaint, police complaint against you. It is better than a Binance, which is like sort of a pariah.
I'm saying that basically you have some recourse, right? Like on the one hand, you want a good product experience. Now, product experience is basically commoditized everywhere. Most products are at the same level. So for example, users will be able to do most experiences really well.
So now it's about trust.
Now it's about trust. And trust comes with all of these institutions working together, right? Like otherwise you have to rely and believe that, okay, Binance will do the right thing. But it's not really right? Like it can go wrong. There needs to be some set of checks and balances. A system of checks and balances is what is now offered with these local entities. And that's why it's easier. It's the right thing for people to do. So in the past, like let's say 8-10 days since this announcement has happened, we've effectively grown by 25% from an AUM base. And it's all in 10 days. And imagine we've been existing for 6 years. So, and I think that was a large moment that will hopefully now, get users to move their funds, especially because we are now entering into hopefully what is another bull phase of the crypto market, where generally prices rise and there is excitement and so on and so forth again.
So I'm not so up to date with crypto, but I did read that Binance had to pay like a $4 billion fine or something like that.
Yeah. So Binance has been under regulatory pressure world over, right? Like again, you need to think of it from there. From the global perspective, Binance is the largest exchange, and it's a beautiful business. Like it's immensely valuable. It works at scale. It is probably one of the only businesses in the world that has users from so many different countries at this volume, right? And Binance had a US arm as well. So the US multiple actually regulatory bodies in the US had sued Binance for different things, and Binance has agreed to settle all of that.
For what things?
So it's either some format of money laundering, or some format of counter-terrorist financing, or some format of tax evasion, or some format of securities fraud, or some format of lack of regulatory compliance. So different shapes and forms, right? And Binance has agreed to settle all of those by paying out $4.5 billion fine. And CZ, who's the founder and CEO of Binance, is still undergoing trial. I think his trial is due for Jan mid, as far as I understand. So Binance is under a lot of regulatory pressure world over. And what Binance is, I think, also deciding is that they want to focus on certain key markets and then grow and scale from there. So, for example, US is a key market for them. Europe is a key market for them. MENA, Southeast Asia are key markets for them. And they want to pick and choose and fight those battles. And I think that's important for everyone, right? Like for every large business, you want to pick and choose and your focus market areas and grow. So, for example, for us at Mudrex, India and EU are good markets, and that's where we focus on.
Interesting. And, I've seen Binance, this happened to Binance, then I've seen it with FTX, then we saw it with Vault. It's like, as much as crypto is interesting, and I do believe that, maybe not the coins, but the technology is very, very sound.
Yeah.
It also feels like there's just a lot of very high profile scams / frauds in the industry, right? And the question I keep thinking in my head is, these people are making money. Right? Everyone's making money. Why the extra? Why push a little more and try to make some more money and then get in trouble?
So I think that's just the nature of us as humans, right? Like that cycle of greed always comes in. Crypto is not an outlier to this. Like we've had the large Ponzi schemes happen world over, right? And even for that matter, it's not just crypto. Regulated assets see this actually much more than crypto does. It's just that those checks and balances are put in place so that these things get noticed and caught, which is why in some format or the other, regulator is good. It's that checks and balances checks that needs to be there in the system, right? That makes sure that everyone is aligned and is working towards the benefit of the retail investor and not working on their own to maximize their own greed. And then a lot of times there are just stupid mistakes that people do, which are things that people should not be doing. Like if you are for example, if you are a person who is dealing with other people's money, then making sure that that money is safe and secure is your number one, effectively, fiduciary responsibility, right? And if you are not going to be able to deliver on that, then how will anyone trust you for anything beyond that point? So I think that is very important. Plus, I think crypto is this unique asset as well, where most entities that are dealing in crypto are somehow your custodian of wealth, somehow enable you to do the transaction and somehow settle these things also. And that creates like a system where that creates a system that can be potentially easily exploited. So
you alluded to crypto being like sort of a young asset class. Do you feel like the volatility of crypto also comes from it being a young asset class?
Yeah, I think it actually does. And like Coinbase has recently published a report where it talks about how the volatility of, let's say, Bitcoin and Ethereum has been changing. And the volatility of Bitcoin is now at an effectively all-time low. And if you look at that chart, it's just a straight line down. And you can see where it's going also, right? So as the asset class matures, and when we say asset classes mature, it means that just more and more and more people come and participate. As more people come and participate, liquidity goes up. As liquidity goes up, volatility comes down. It's a natural progression. It's just that all of this has happened in crypto in 8 years. Like the same thing that happened in stocks over 40 years has happened in crypto in 8 years. So as a result, you see all the hypes and all the busts as well.
Happening faster.
Everything compressed, everything faster. And this asset class is just growing phenomenally. So, and it's growing at the end of the day because I do believe it's important. Like the asset class is necessary. Let's keep the technology side aside for a moment. From an investment perspective, it is one of the few asset classes that have emerged over the last few years that did not exist. And typically investment managers say that an asset class has emerged when you've got some new asset where you can park your money, which is effectively negatively correlated or uncorrelated with the traditional existing asset classes. And the existing assets are basically real estate, commodities, gold, cash, and equity, right? Like effectively these.
You're saying it's disconnected from, it has to be disconnected from the
Correct.
others.
Like that, if it's connected, then you don't really care about it. Like most people don't invest, but crypto is disconnected because it has a lot of different properties about it that make it disconnected. And because it's disconnected, and it becomes attractive for investors to add it as a part of their portfolio, because in reality, the only free lunch that you get in this world is diversification. Because if you diversify your assets over a larger basket, you can reduce your risk against systemic things that go wrong and effectively make more returns per amount of risk you take. That's what most wealth managers talk about, which is why a lot of people have been saying that, okay, this ETF launch that's happened very recently again will not change a lot of things.
What is the ETF? What does ETF mean?
Okay, so what's happened just over the last few days again is that in the US, 11 different entities have been approved to launch a Bitcoin ETF. What that means is
Wasn't that a spoof? Like somebody had hacked the SEC?
No, it got hacked one day before the actual announcement. So all of this was going on since the last. All of this was going on since the last 6 months. All the applications have been going on since the last 6 months, but the entire process took about 8 years. Like the first attempt to file for a Bitcoin ETF was 8 years ago in the US. And it took 8 years for it to get to a point where today 11 ETFs have been launched and they are live, and they saw like $4.5-5 billion worth of trading on day one. So, coming back, the reason why ETFs matter is because they now let institutions participate into crypto.
What does ETF stand for?
It's an exchange traded fund. So we have mutual funds, right? Where you participate in a mutual fund, you buy and sell basically shares in a mutual fund. Similarly, you buy and sell shares in an ETF. It's just roughly the same thing. You can think of it as an ETF as a mutual fund only, broadly for all from a retail investor perspective.
So mutual funds for crypto though?
Yes. It's slightly nuanced because it's, in this case, just tracking one asset, which is Bitcoin. And that's the one asset with which everything starts off and then slowly and steadily builds up later on. So with that ETF coming, what you get is you get the ability for institutions to participate in crypto, which till date was not possible. The reason why it was not possible is because handling crypto, handling taxation, handling just the asset itself, custodying it, making sure that you get fair price, all of these are fiduciary responsibilities of the fund manager who manages the money of the institution. Doing all of that is very complicated, but once it's an ETF, it's just like buying shares of Apple, right? Like it's basically the same. So now large institutions
so the
can come in.
ETF itself is clean. You don't have to deal with all the crypto parts.
Yeah. So all the crypto parts get taken care of by the ETF manager. They charge you a fee for it.
Can I buy ETFs on Mudrex or any?
You can't buy ETFs on Mudrex, but you can buy the actual Bitcoin on Mudrex. Having said that, we are launching a new service for institutional players to be able to invest in ETFs via Mudrex institutional services. That's something that we are working on right now.
Can you double click on that? What is the Mudrex institutional services?
So we've got like inside of Mudrex, we cater to our retail users as well, but a lot of users come into us who have demands that they want to buy larger amounts, right? And for them,
what would these large amounts roughly be?
Anything north of $50,000. So anything north of, let's say, 35, 40 lakhs. Is basically what a large amount is, what we categorize as a large amount. Now, these are either individual transactions that they want to purchase, or they want to custody their assets. They just want help with managing all of this, managing taxation, how do you file returns, and so on and so forth. So it's a white glove, handheld service that we offer to these large institutions so that we can help them manage and diversify.
Wait. So wait a second. So you guys have basically a services layer also on Mudrex. We're like, hey, anyone investing more than $50,000, you can come do it with us. Do the other exchanges also have something like this?
Some of them have it. Like globally, people do have it. For example, Coinbase has such white glove services. Typically, Binance also used to have such a white glove service. And I think it's not just for Mudrex, right? Think of it this way, that there are portfolio management services anyways who help large investors manage their.
But it's usually not by the exchange itself, right?
Correct. It's not by the exchange. And that's where I think Mudrex is slightly different. We offer users access to the actual products, but we are not really an exchange ourselves. We are a broker layer that sits on top and helps users invest.
What is the base exchange?
We use liquidity from a wide variety of sources. A lot of exchanges in India, a lot of decentralized exchanges, a lot of global exchanges, and so on and so forth.
Okay, so here's the part of the pod where we go into a little bit of speculative work.
Correct.
Right? And everyone watching this is pure speculation, right? This is me just being curious and kind of digging out insights. You're saying Bitcoin ETFs are out. It's a big moment for Bitcoin. You're saying that all the traditional institutions who want a more higher safety profile are now doing Bitcoin ETFs because it's just easier for the taxation part and just management and filing part. What is that going to mean for Bitcoin? What is that going to mean for crypto?
Correct. So again, so that we can answer this question better about how is 2024 going to look like, let's talk about first what's happened over the last couple of years, right? So last couple of years, what has happened is that the main challenge that crypto was going through was that for broader acceptance, it needs a regulatory stamp of approval, saying that the government's all over saying that this is okay. And that's really what has emerged over the last 2 years. Like there is a very clear regulation coming out in Europe. In India, we've already discussed everything that's happened. Plus, India has peer-led this effort with G20 to formalize crypto as an asset. In the US, there is the ETF launch that's happened. There is a case that SEC and Coinbase are taking to the Supreme Court to get an answer to how to deal with crypto and so on and so forth. So, world over, regulatory clarity has emerged or will emerge in most jurisdictions the next couple of months. So that's one thing. And what clarity does, it brings certainty.
Do you think regulatory clarity will also come to India?
I think it's much clear, right? Again, if you look at, let me give you an example. When the RBI banned crypto 3.5 years ago, there was a paper that was going on, a suggestive paper, where there was expected that anyone dealing in crypto would get a 10-year prison sentence. So we went from a 10-year prison sentence to, okay, come register, comply, right? And this has happened in 3 years. Can you imagine the pace at which it has moved? So a lot of people think that regulations are moving slow. I actually think that they're moving incredibly fast for any jurisdiction, for that matter.
And so, what's the incentive for India to legalize crypto? It's just more tax revenue.
No, yeah, I think that's the wrong way of looking at it. That means that you're only looking at crypto from an asset class perspective. That's actually not the narrative at all. Which I think we can go back and talk about why is crypto actually really important. See, as more and more goods and services move to the internet and the world becomes more and more a global place, what you need for efficient transfer of these goods and services is some mechanism where money also moves in the way the internet moves, right? And crypto is this money made for the world. So what that enables is that, let's say, people in India creating services, creating goods and so on and so forth, selling it world over, earning money in an easy and cheap enough way, and then reparting it back as revenue in their books and then paying taxes on it. So I see it very differently. I see it as an opportunity for the design freelancer who is creating design content for, let's say, a Swedish entity, getting paid in, let's say, Bitcoin, then using that Bitcoin just as an asset if they want to, or converting it to fiat and buying eggs and milk with it. Right? So it just opens up a new way of collecting money, collecting revenue. And that part is the real part where it's important, right? Like the last wave of internet growth was, let's say, from the 90s to 2000s. Usme the product creation part, India missed completely. But the services part, we were reasonably good at, right? Like with all the large companies in the country, the TCSs, the Wipros, the Infosys, like you look at the Nifty 10 and you will find all of them there, right? All the large internet companies in the country are the companies that are servicing the world sitting out of India. Crypto just enables that same model at insane scale.
So India doesn't want to miss out.
Yeah, it doesn't want to miss out, right? Because think of the Indo opportunity as well. India is the largest English-speaking, reasonably talented, tech-savvy, understanding economy in the world, right? You can literally service the entire world from this country. And
So
there are
what you're
just more and
saying
more
is
and more.
they want as much import to come in the country, and
Yes.
crypto is the mechanism. to
Yes,
do that.
it's like India is already the largest remittances base in the world, right? And our people are already world over. That's because we go over there and do all the business for them, right? On the other hand, with crypto and with internet blowing up, you don't really need to go to a place. You can stay in the country, build those services and do it, and you can. And crypto is just one mechanism to collect that payment, or one mechanism in which you can get paid fairly for it. We can go much more deeper into why it's fairer and so on and so forth, but I don't think that's the point of.
But here's the thing, right? Like, I did a video on CBDC.
Yeah.
You know, central banking digital currency, right? So they're making like a digital rupee. And my understanding is the reason they have crypto in it and all of that is to just make international transactions easier. I think that's the main this thing of it.
Actually, that's also not true. So if you're just talking about payments, UPI is the best thing in the world. And it is by far the best protocol. It scales really well. It works really well. But UPI is built only for payments. The job of a currency and the task of a regulator is actually much more than just payments. It is about who that payment should go to, which payments are allowed, which are not, what are rules that are built around that payments. And today, all of that infrastructure is outside the payments layer. It is in systems that people are creating. CBDC gets, or effectively the hope or the dream is to bring all of those rule making into the payments layer. So a very popular example or use case of CBDC is the direct benefit scheme. Let's say, for example, the government wants to give subsidy to farmers to buy fertilizers. They can earmark money giving out to farmers that can only be used for fertilizers across these 500 or 50,000 shops that are fertilizer sellers, who can then accept this money only for purchase of fertilizers, right? That makes sure that the subsidy is much more efficiently used and just doesn't get lost away. That actually saves the country a lot of money by just making sure things are efficient. And I think the purpose of CBDC is more that. It gives the government a better way to make sure that their spends are effectively being used and effectively being used in managing and running the country in a much better way. Jabki UPI is just payments. And UPI has to be just payments always. Because as soon as you bloat up the payment stack, success rate keeps on dropping, experience drop, failures happen, and so on and so forth. That's why UPI needs to be payments, but there is something that can be built on top that leverages the network UPI has created to efficiently distribute money to people with these rules as to where can it go and where it can not. That's where CBDC is different, and it takes, like all of CBDC takes encouragement or inspiration from everything crypto basically. Like all CBDC it's a private crypto, but for the government and at the government scale, whereas Ethereum or Bitcoin and so on and so forth are public blockchains that enable you to do the exact same thing, but peer-to-peer anywhere in a separate network.
Interesting. Let's go back to the speculation piece, right?
Yeah. Sorry.
How's Bitcoin going to do this?
Yeah. So we completely missed that. So going back there. So we have these regulations in place, right? The second thing that's happening is that along with these regulations, the opening up of ETFs gets a lot of institutional capital into crypto, or potentially a lot of institutional capital into crypto. And let's just talk about the numbers over here for a minute, because this is the numbers podcast, right? Institutional wealth in the US, just in the US, is about $35 to $40 trillion. Most asset managers are of this opinion that you should allocate 1.5, let's give or take 1.5 to 3% of your net wealth into crypto, or for that matter, Bitcoin right now, for it to be an effective optimum diversification piece, right? Which means that let's say about 2% of $30 trillion is about $600 billion. $600 billion is a large number. And it's not expected that all of this money will come in today. It's expected that all of this money comes over, let's say, 2.5, 3 years, as slowly and steadily more and more people get warmed up to the idea, right? But let's say even a tenth of this comes in the in the first 6 odd months is, let's say, $60 billion coming in. That itself is a very large volume of inflow of capital that comes in. That will be larger than the net inflow of capital that has come in the last 3.5 years in crypto. So we can understand the magnitude that we are talking about. And I think the third thing that's happening is something called as a Bitcoin halving event. Bitcoin is something that has very fixed supply, and the only way more Bitcoins get generated is by a process called as mining a Bitcoin. Now, every 4 years or so, the number of Bitcoins that get given out via the mining process go to half, which is what it calls as a halving event, which means that supply of Bitcoin reduces. On the other hand, we expect that the demand goes up because of everything opening up for institutions, everything opening up for retail as well because of regulatory clarity. So supply goes down, demand goes up, which means that in reality, prices should move up. And that's what most of us expect as well. We expect that over 24, we should see BTC reaching newer highs. Of course, there will be volatility. I'm not saying that it won't go down in the period as well, but we expect it to go up there and then continue to move ahead.
Interesting. And how does that ripple effect on the other coins?
So historically, first BTC goes up, then that money moves to ETH, then that money moves to altcoins, and then it just cycles back to BTC. And that's basically people being greedier and
greediest.
But
tell me one thing, I have a question, right? I mean, from what I've heard is that, Bitcoin, Ethereum, they're blue chip, right? They're like, hey, these are blue chip. These are like, everyone's backing it. Jack Dorsey, everyone's pretty vocal about it, right? And then you have a bunch of coins that you feel are going to be the next big ones, right? Like your Polygon and your Solana and all the others. And then there's a bunch of coins below which go everything from whichever controversy happened, there'll be a coin named after it, right? So the public market word for this is shit coins.
Yeah.
So how does Mudrex deal with this thing? Do you have a...
Yeah, so I think, so for example, we do a lot on the side of education on the platform. So you talked about blue chip assets. We've got an index product called as CoinSets, where where our most popular index is this index called as Crypto Blue Chip, where the top 5 really valued tokens are there, and it's in the allocation of market cap and so on and so forth, making it just really easy for users to invest. Then what we also do apart from this is just categorize all tokens, make sure that all information about it is publicly available. So we recently, about 3 odd months ago, launched this new product called as Mudrex Insights, where the intent was that typically in stocks, what you have is a fundamental analysis, a technical analysis, and going deeper into buying a particular asset, right? The same thing actually does exist in crypto. It's just the nature of it is different. Like how you should evaluate a token fundamentally is different from stocks. Because in stocks, you would look at cash flow statements. In crypto, you would look at community and how much comments are coming in on their GitHub repository, or at what rate is the project going, right? So there are markers. It's just that they are different. It's because it's a different world, right? Like the same analogies don't apply. So we've launched this product called as Mudrex Insights, where we give users this information about, okay, are these tokens fundamentally sound or not? And
you're talking
we've got
about
a rating
new tokens.
Yeah, and we support about 350 tokens. So we've got this rating for about 200 of them. And for the rest 150, we just say there is no fundamental analysis, so please don't invest. Like if you want to, just make sure that you do it with caution. We do the same thing with technical analysis. We give an analysis of where the price might heading.
Do you think as an exchange you should be putting your foot down and saying there's no fundamentals behind this, we're not going to have them on the platform?
Yeah, we used to do it. In fact, we used to do it a lot, and we still do it. To give you some context, there are maybe about 2,000 tokens. We list a very small subset of them. And what we look at is what is just general volume, what is information around it, is there a sound basis for it or not?
And you have a research team doing this?
Yeah, we do have a research team doing this in-house that does this. In fact, every Tuesday we publish something called as the Crypto Market Outlook Report that talks about what are the most important things that are shaping up in the crypto space over the next week. And that's, I think, our most read publication that our users like 1 week, I remember we missed out publishing it because I think it was Diwali or something like that. And I got a ton of emails saying that, why is this report not out? I really enjoy reading it, right? And that's the value that we create.
Interesting. And these ratings that you have on the platform, right? In general, like I would say a Bitcoin would be a 5-star rating.
Yeah.
So coins that are dubious, if there's a 1-star rating or like 1.5-star rate, I don't know how you guys rate it. I don't know if you have the halves or whatever. Let's say 1-star rating. Is there like proven lower activity because of that?
Actually, not. And the rating and that have nothing to do with each other, right? Like we see a lot of small cap stocks who are effectively poorly rated but have very high activity on them. So activity has nothing to do with rating, because activity is just greed, fear, how people think, hype around things, and so on and so forth. In crypto,
So they don't
as
care.
well as
People
stocks.
really don't care if you put a 1-star rating on something.
No, I wouldn't say that people don't care. It's a part of their thinking process. It's a part of their decision-making process, but those are risks that people are willing to take. At the end of the day, everyone has their own assessment, right? Like personal finance, trading, investing is all about everyone making their own assessments in their mind about what they want to do. And it's there in the part of their risk metrics. It's just that they value that less versus the potential upside that they might be able to make.
That's a very interesting insight. So, like, a lot of people are like, hey, we should just ban crypto, right? And even though I'm not like right now the biggest fan of crypto, I feel like there are these two sides, right? There's a side that's like, I don't like this, I don't understand it, we should ban it. And there's the other side that, well, at least you should be given the light of day. I'm of that side, right? At least you should be given the light of day. People should be allowed to make their own decisions. But it's quite interesting to see that despite the fact that you put a rating, people will still make a decision. And that's the question, right? Do you think people are too stupid to make their own decisions, but at the same time you expect them to vote? And
okay, let's talk about it in a different manner. You've seen all the chocolate bars on shelves in a supermarket.
yeah,
You turn it around, you see the calorie rating, you see the value that it has. In most cases, it does not make any sense for most people to eat anything in a packaged box that has a lot of sugar, right? It's downright bad for their health.
yeah,
People still do it.
yeah.
So
you're
a
saying
rating does not mean people won't do it. It's about making that informed choice.
Yeah.
And that informed choice, I think, is really important.
That I agree with.
Yeah.
That you shouldn't just blanket ban something if you feel like you can also give people informed choice. Uninformed choice is bad, but if you can give people an informed choice, I think it makes sense.
Yeah, so I think, and that's where I think our perspective is different. So if you, we believe that most platforms or most, because again, the asset class is nascent, all of this information is very scattered. And for most platforms early on just focused on getting people the ability to get them to buy and sell. We actually think that, okay, getting the ability to buy and sell is fine. That's a commoditized product. The real value is how do you distill out all of this information on the internet, make it easily accessible and consumable by the user so that they can make those choices and then help them make those choices. And then stop them from doing the wrong choices as well in certain cases. So that's what we do. So for example, in some cases, we've got a high risk banner that comes up with tokens saying that, okay, this is not something that you should do. We recently launched an options product in crypto. And over there, we don't allow people to invest large sums of money. We have daily limits.
What percentage of the product work is just warning and analysis?
Oh, about half of it. I would say it's really half of it. Like research is core to us. Because I think that's important. That's an important fraction that will help people understand what are they doing in crypto. And again, I'll tell you an example of or an analogy of why this is important. See, the reason why doing your own research is important, and I'm pretty sure you would have heard this term, right? Do your own research before investing in anything. Like even the mutual fund ads say mutual funds are subject to market risk. You should read the offer document carefully before choosing to invest, right? The reason why doing your own research is important is because you don't want to regret the choice you made later, irrespective of what happens. Because at the end of the day, no one can predict where things will happen. So if you give the users the ability to do their own research better, and if they make those choices with confidence, then I think it's a much better space to be in.
But the problem with money is you feel like you've gone and done your research and made a choice, and then when you lose money, it still feels bad.
Yeah, of course it feels bad. And of course, it's one of the hardest problems to solve, right? That's why 97% of traders lose money. Very few people make money. So for most people, of course, the right thing to do is just park your money, do regular SIP and make that long-term wealth.
Yeah.
Just do recurring SIPs, and that's the best thing for most people. Some people can choose to do trading. In some cases, if you think you have some information asymmetry, you can choose to use that at your advantage and trade for the longer run. All of this is true for all asset classes, not just crypto. So the asset class is the same. The user's mentality is the same. What they want is the same. Just that it's a new form, new format, new function, and it will evolve slightly differently at a much more rapid pace simply because it's global, available everywhere at the same time to everyone and moving at this rapid pace.
Okay, I have one more question, right? And this is for laymen watching. What's the effective tax rate in India on crypto? Let's say I'm using Mudrex or any other platform, right? I've put in 1,000 rupees. I've invested, let's say, 1 lakh. And it's gone to 2 lakhs. Let's say I've had a good time. Some coin has gone up. How much tax do I pay? And how do I actually file this?
Correct. So let's say you bought something at 1 lakh, you sold it at 2 lakh, you've taken money back to your bank account. When you take money back to your bank account, you'll typically pay a 1% TDS. And in March, when you file your returns, the gains that you made, so that 1 lakh went to 2 lakh, so you made 1 lakh ka gains, 30% of that you will pay as taxes, which is pretty standard for any gains that you make in general. The 1% that you paid is offsettable against that 30% tax that you file later on.
Got it. But wasn't there like some new tax or something that everyone's going crazy about? You pay some 20%. I might be slightly out of the loop, but there was some tax thing around crypto that people are getting angry about.
So the part that people are angry about is the 1% TDS. So for example, when you do any transactions in equities, you pay a 0.01% STT. It's a very small amount, so it's non-noticeable, and most brokers do deduct it. This is 1% in crypto, so it's a large amount that shrinks the rate at which people do transactions. That's the one part that's annoying. The other part also that's annoying is that unlike equities, you can't offset gains in crypto versus losses in crypto. So gains are you pay tax on, losses it's your fault.
But in the stock market, you can offset it, right? By the way, I'm a stock market noob.
Yeah, so in the stock market, you can offset gains versus losses. In fact, you can also carry forward losses to futures, to a future date, so that you can offset it for future gains. That's also something that you can do.
You can't do that in crypto.
No, you can't do it in crypto.
So if you lose, you lose. If you win, you pay tax.
Yeah, that's correct. And also in the stock markets, there is something called as a long-term capital gains and a short-term capital gains. That's also, of course, not applicable in crypto. The long-term capital gains and short-term capital gains actually was a key driver to a lot of growth in the stock markets.
For people to buy and hold.
Yeah, for people to buy and hold. It's an incentive to invest in the long run.
Paint a success case for your company. Like, paint a case where everything goes right over the next 3-4 years for Mudrex. Where do you get?
Okay, so I think our perspective of Mudrex is slightly different. We think that crypto is a financial services enabler. And financial services is basically wealth, savings, insurance, credit, payments, and so on and so forth. And we are right now at the wealth and savings space. That's one part.
So you'll branch out of crypto?
No, all of this will happen necessarily in crypto. I think that crypto is a much more efficient way of doing and offering financial services. And just that as this efficiency increases, more and more people will enter. The second part is crypto is a global asset class. It's one of the only truly global asset classes, maybe after gold, that exist. So and as an outcome of that, because investing and dealing with money is such a global problem as well, problems of people are the same world over. Like when we talk to our users in Italy and when we talk to our users in Bhiwandi, most of their problems are actually very similar. Like, what do I do with money? How do I invest? Where should I park my funds? How do I make it grow? And so on and so forth, right? Their problems are really similar. So success case for Mudrex is becoming this global platform that can allow users to invest in crypto in a way where they are confident with their investing choices and can help them grow their wealth and make money. That's where we want to get to.
And what's the failure case? I think one thing that's on podcasts that's really never spoken about, everyone's very optimistic, right? But one thing I've learned about the world is things can burn and things can die.
Correct.
Right? And that's true for every company.
Yeah.
And a lot of people in the comments, sometimes I see them like commenting on Kunal Shah's this thing, like your company is going to fail, this, that. Actually, most smart founders have already baked it into their model. These are the failure cases for me, right? And they're doing it despite the fear of knowing that one day it might die. So what's the failure case for you?
No, I think the simplest failure case is that everything shuts down, right?
And the government just gets angry.
It gets shut down. And if it gets shut down here, we just do it in another geo. It's not the first time that we will be doing it. Again, we're a 6-year-old company. Interestingly, Mudrex started out way back in 2018. We started and like just 3-4 days ago was our 6-year anniversary. So we started on January 12th. We launched our first product on the 6th of April 2018, which was a crypto trading platform in India. And on 15th of April, RBI banned crypto in the country, right? So it's not the first time we'll get banned in the country. We'll just move base effectively.
So I have one last question around crypto. This is for myself, right?
Yeah.
So I've dabbled in a little bit of crypto. I'll buy, I'll sell a few weeks later, etc., right? It's like I'm too driven by news and information. And then I realized this is probably not the best for me. Like today, my best investment is FD, right?
Yeah.
I come from that safety class, and crypto and stuff like NFTs. I dabbled in NFTs for a while because I was like, let me learn about this.
Correct.
I feel like anything new that comes out, I want to play with it and learn about it. At least that's my due diligence to that
Correct.
thing, right? And if it's based on technology, like if it's based on, sound technology, then it's worth, playing around with.
Correct.
Okay, so I have one last question on crypto, okay? I know a lot of people that have invested and then they hear some news that this is going up or this is going down and then they sell. Or you've invested in Bitcoin, you've put in whatever, $5,000 or let's say 2-3 lakhs. And then tomorrow you wake up and it's 1 lakh.
Yeah.
You get the stress that, oh shit, it might go to 20,000 rupees. I might as well sell now. So there's a word for this, right? They're called paper hands. People who just immediately sell when there's any sign of panic.
Yeah.
I find it exceptionally hard to meet anybody who's bought crypto and is in there for the long run. As soon as they see that, that graph go so far down, which is not normal with any other stock, right? The volatility here is too high. How do you stay invested in the long term? Is that even a necessary thing? Is this would you prefer to trade? Like, how should you do it?
No, at least the way I think of it is that see, if you are participating in crypto, you're participating in crypto from this lens that okay, this is a new asset class that's emerging, and as a result, a lot of wealth will get created in the long run. That should be your thinking. If that should be your thinking, ideally, what happens today, tomorrow, and so on and so forth should not matter. I say should not, but it does, and we'll come to does in a minute. So as a result, if that's the thinking, what you should be doing is just adding funds regularly in some regular interval.
Like SIP types.
Yes. So for most people who want to invest in crypto, who come and ask me, okay, I want to participate in crypto. What do you expect? What do you advise me to do? I would recommend that start off with putting in really small amounts, get comfortable with it over a couple of weeks, and then if you are still okay with everything that's happening in terms of volatility, just set up a simple SIP that does the same recurring buy either every week or every month, and then forget about it. That's the same standard advice that works across asset classes. The volatility in crypto was the same volatility that effectively stock markets used to have in the Indian stock market used to have in the early 2000s, right? And that volatility, of course, is scary. It's scary to anyone. And the real way to think about it is that if you're committing to adding small amounts over a long run and thinking of it only from that long-term perspective, then I think it's fine. Then your expectations are really correctly set. But if your expectations are I'm putting in money today and I expect 200% returns in 2 weeks, then you should be okay with it going to zero in 2 weeks as well. Is what I would recommend. And in that case, I would genuinely recommend people to not enter into crypto at all. You are better off buying a lottery somewhere else.
Yeah, and this is what I like about you, right? Like you're pretty clear about technically who your customers should be and who your customers shouldn't be. Because I also know that the people who come in and probably invest and lose all their money are going to be a pain to you. Because for whatever reason or the other, they'll probably email you or text you and be like, yo, I lost my money. What are you going to do about it?
Yeah. No, and it's hard, right? Like the only way you can solve for that is, okay, let us help you. Let us help educate you more. Let us help you understand how this works. And financial literacy is in very early stage for general investing, leave alone crypto. So as more financial literate people come in, as financial literacy grows, and in a lot of cases people don't learn by reading, right? Like they learn by their own experiences. So the market takes its own fees by these by all of these losses and by all of these experiences that you go through. That helps you become better. And you would rather do that early on in your life when you are young and are able to understand the dynamics rather than when you're old.
Interesting. Wow. That was interesting. I learned a lot more about crypto. Like I would say I'm leaving slightly more hopeful than I started out with. And I think that I'm glad that in India, at least, it's in good hands, right? From whatever this conversation I had and what I know. I mean, I know you off screen. So I'm glad that it's in good hands, people who actually care about it. Because we've had a string of like really bad actors come and screw up the industry. So thank you so much for doing it the right way. And I hope, over the next few years, you continue to do it the right way, right?
Yeah.
So, yeah, do you have any parting words for the audience? How should they think about crypto? How should they think about this asset class in their life?
So I think the way you should think of this asset class is that it is going to be a part of your life over a longer period. There are just too many people pushing for its existence that it's going to be there.
It's there. Huh?
It's going to be there. It's going to be there today. It's going to be there like 10 years from now, 20 years from now as well. You can choose to decide whether you want to participate in it now or whether you want to participate in it later. And along with that choice, what you also need to make sure is that you are choosing the right partners to participate it in with, right? And I would make sure that I would at least request people to make sure that they go with partners that are compliant, that are there for their journey, and start participating with small amounts so that they can slowly and steadily build wealth up. Do not think of this as a way of getting 200-300% returns in a few weeks or in a few months. If someone is advertising something that's too good to be true, it probably is not. So always take that, thumb rule maximum and go ahead from there.
And for everyone in the audience listening, these are my words that I'm adding on to it. If you're buying something, make sure you do your own research. And if you feel it's complicated or you don't understand it, don't invest.
Please don't invest.
As much as, it will be like, why are you saying don't invest? It's my kind of job to tell you that if you don't understand it or you feel like you're not the right fit, don't do it.
No. It's actually my job also to say the same thing. If you do not understand it, or if you've heard about something by some mama ka chacha ka ladka on some random WhatsApp group and you're tempted to put in money in it, please don't. It'll just hurt and it'll just not have the right expectations. So don't do it.
Awesome. Thank you so much for coming on.
Thanks a lot, Varun. My pleasure.
So ladies and gentlemen, that was Edel. I learned a lot from that conversation. I learned about ETFs. I learned about everything that's going on in crypto, which, I was sort of out of the cycle or out of the loop on. And I think that the technology behind this is very sound. And for me, it's a continuous cycle of learning. And, I think over the next 3-4 years, crypto is going to be part of our lives, whether we hate it, whether we love it, it's going to be there. And I think, like Edel said, right, it is better to give people an informed decision and the ability to either buy or not buy, and for it to be there, instead of us saying, hey, let's just completely ban this asset class and be like, pretend like it doesn't exist, while the rest of the world is okay with it and they're continuing to make money off it, right? And they're continuing to gain tax out of it and etc. So I think it's good for the economy that an asset class like this exists. It is a riskier asset class. And for most of you, if you're confused, if you're like, I shouldn't do this, you shouldn't do this, right? So that's it for me. Bye-bye.